In illustration 18, we'll just see what is the advanced level in this question now. Bharati does not maintain her books of accounts under the double entry system. From the following details, you have to prepare the trading profit and loss account for the year ended 31st March 2019 and the balance sheet as on that date. They have simply given the cash book. If you go through the cash book, you have purchases, creditors, general expenses, wages, sales and debtors. That means this is actually what money you have collected or you have paid. Okay, so please remember these are actual collections. So because it's a cash book. But if you see the additional information, they have given the stock of the goods which is 40,000, 60,000. Debtors, they have given the opening balance which is 38, but they have not given the closing balance of debtors. So now we have to calculate that. Next, creditors 58,000 they have given and 52,000 closing balance also they have given. Machinery, it remains 1,70,000. Then you have credit purchases of 74,000. You have credit sales of 1,40,000. You have opening capital of 2,22,000 and there is a depreciation on the machinery of 10% per annum. So we have to go for depreciation in this question. Like I told you in the previous problem, there the depreciation is not mentioned, so we are taking as it is. But here we have to solve the problem by reducing the depreciation on the machinery at 10% per annum. So with this, we'll start solving this problem. So we'll quickly frame the debtors account. So like I told you, once again, debtors account is what? It's a asset and therefore the opening balance will be on the debit side. So we have a how much? 38,000. And from the cash book, you can see that the debtors collection is how much? 1,20,000. So by cash, 1,20,000. And they have the question itself has mentioned the trade sales of how much? 1,40,000. So two sales, 1,40,000. So we are going to get a balance, that is the closing balance of debtors 58,000, which is missing in this question. So we have found out the balancing figure, which is 58,000. Then we can, so now with this, I think we have all the information ready for trading profit and loss account and balance sheet, right? So we'll start with the trading account. So we have the opening stock of 40,000, closing stock of 60,000, cash sales of 1,60,000, trade sales what we found out 140, and then we have purchases 56,000 by cash, credit purchases 74,000, wages 10,000. So you arrive at the gross profit of 1,80,000. So we'll transfer that gross profit to the P&L. So by gross profit 1,80,000, we have general expenses of 24,000, and then one more additional information, which is 10% depreciation on the machinery. So the value of the machinery is how much? 1,70,000. So we'll calculate 10% depreciation. So 17,000 will be the depreciation. So end of the day, the net profit will be how much? 1,80,000. 1,80,000 minus 24,000 minus 17,000. So your net profit is going to be 1,39,000. Then with this, we go ahead for the balance sheet preparation. So I hope everyone knows that what are the liability side and what all items will come on the asset side. So we quickly frame them. So cash 1,42,000 asset side. Stock, closing stock, will take 60,000. Debtors will take 58,000. Machinery, it was actually 1,70,000 less depreciation 17,000, so 1,53,000. That is all ready for the asset side. And for creditors, we have the closing balance of 52. Capital, they have already given the opening capital as 2,22,000, and whatever net profit you arrive from the profit and loss account, will transfer that to the capital, that is 1,39,000. So the total of capital will be now how much? 3,61,000. 222 plus 139. Yeah, 361. So the total of liability is going to be 4,13,000, and on the asset side also it is going to be 4,13,000. So the only twist in this question was depreciation. Many students might miss out on the depreciation part, so please be careful. If the depreciation rate is mentioned, you have to calculate that. Take the depreciation portion on the P&L side and also reduce that from the fixed assets, the balance sheet. Okay, so we have one more question. Okay, this question I'll quickly discuss because it is same as the previous one. Arjun carries on the grocery business and does not keep his books on double entry basis, and the following particulars have been extracted. So So they have given the plant and machinery 20,000, 20,000, stock 9,000 and 16,000. Sundry debtors is 2,000 and 5,300. Creditors is 5,000 and 4,000. Cash at bank is 4,000 and 6,000. And they have given the following information, that is advertising 4,700, carriage inwards 8,000, cash paid to creditors 64,000, drawings 2,000. And apart from that, the total sales during the year was 85,000. Yeah, so the total sales during the year was 85,000. Purchase return during the year was 2,000 and sales return was 1,000. Depreciate plant and machinery at 5%. Provide 300 for doubtful debts. Prepare the trading profit and loss account for the year ended 31st March 2019 and the balance sheet as on that date. So we have some additional information over here, that is your purchase return and sales return they have given, total sales they have given, that means it includes credit sales and cash sales, and then you have been given depreciation at 5% on plant and machinery and 300 for doubtful debts. So with this additional information we'll start preparing the trading P&L and uh, balance sheet. But before that we have something to do, because we don't have a opening capital. What we will do, whenever the opening capital is missing, what we have to do is simply prepare the statement of affairs on the 1st April. So with the current information, that is cash they have given, stock they have given, debtors, plant and machinery, and creditors they are given. So the balance sheet items are ready, right? So we will find the opening capital with this information. So you have cash at hand 4,000, stock 9,000, sundry debtors 2,000, plant and machinery 20. So the total is how much? 35,000. From this we'll subtract the creditors of 5,000. So we arrive at the opening capital of 30,000. So this is enough for us to go for the problem now. So now we'll quickly prepare the creditors account. Why we are not preparing debtors account? Because they have already given the total sales. So that is more than enough for us to proceed with the problem. So, but the credit purchase is not mentioned, only cash purchase is mentioned. So we have to go ahead and prepare the total creditors account. So opening balance 5,000 will be on the credit side because it's a liability, and then to cash 64,000, purchase returns 2,000. So we arrive at the and the closing balance is 4,000. So we arrive at the credit purchases, which is 65,000. This will be the balancing figure, 70,000 minus 5,000. Yeah. So with this, we'll go ahead. So we'll open trading account. So we have debit, credit, particulars. Yes. So opening stock is given as 9,000 rupees. Two purchases, trade purchase 65,000, which we found out just now, less returns 2,000, so 63,000 net of purchases. Carriage inwards 8,000, sales 85,000, which they have already mentioned the question, less returns 1,000, so net of sales is 84,000. Closing stock 16,000. So 84,000 plus 16, 1 lakh, minus 9,000 minus 63 minus 8. So gross profit is going to be 20,000. Yeah. So now we'll prepare the profit and loss account. So by gross profit 20,000, advertising 4,700, all these indirect expenses will take it over here. Then we'll calculate depreciation of the machinery. So that comes to 1,000 rupees. Yeah. Then provision, they have asked you to prepare for 300 rupees. So we'll provide for doubtful debts 300. So the net profit is going to be 20,000 minus 4,700 minus 1,000 minus 300, that is 14,000. Yes, and the balance sheet. So we have cash at bank, the closing cash balance 6,000, closing stock 16,000, sundry debtors 5,300, less provision 300 we have made. Plant and machinery 20,000, 5% of that we calculated depreciation, that was 1,000 rupees. That comes to 19,000 rupees now. Sundry creditors closing balance 4,000 is there. Then capital. So from the statement of affairs, we found out the opening capital, that was 30,000. To this, we'll add the profit made during the year, which was 14,000. Subtract the drawings during the year, which is 2,000. So the net of that is 42,000. So with this, I think the balance sheet will tally both the side. You got 46,000. Clear? Yeah. So we'll go to the last problem, that is illustration 20. Pandian does not keep his books under the double entry system. From the following information, prepare the trading profit and loss the balance sheet as on 31st December. So they have given furniture, cash in hand, debtors, stock, bills receivable, bank loan, creditors, and they've given the cash sales, cash purchases, carriage on purchases, commission received, drawings, salaries, credit sales, credit purchases, carriage on sales, interest on bank loan, additional capital, office rent, write off depreciation at 5% on furniture, and provide 1% for on debtors for doubtful debts. So I think when we talk about the statement of affairs, trading and profit and loss, there is going to be no issue, except that you are going to have tough time in finding out whether these are capital item or revenue items. So there are few items which are new over here. So I'll quickly go through that and then we will go ahead on the problem. So here you can see they have given interest on bank loan. Interest on bank loan is an indirect expense. So we'll take this to profit and loss account. Carriage on sales. What happens? What is this carriage on sales? So whenever you are going to make any sale, okay, you have to send the goods to the customer's place. That is the reason why you have to pay for the carriage. So that also will be considered as an expenditure. Same way, you are going to have carriage on purchases. That is, you are going to make some purchases. You have to pay for the carriage, right? So how are we going to treat that? That is what we have to know. So if you see over here, we are going to take this carriage on sales on the debit side 700, yeah, but the carriage on purchases will be part of trading account because the purchase as such has gone into the production, right? So the cost of purchases or the carriage on purchase will be part of purchases. That is the main reason why we will take it to trading account. Whereas when we prepare the profit and loss account, the carriage on sales will be an indirect expenses because it is a post sales expenditure. So we will take it over there. So to carriage on sales 700 will be part of P&L, but carriage on purchases will be part of trading account. Apart from that, interest on loan is also indirect expenditure, so we'll take it to profit and loss account. Then we have depreciation on furniture, like we did in the previous problem. We'll calculate 5% on the furniture value, and then provision for doubtful debt 600 will provide. Yes. Apart from that, I don't think there is any complication in this problem. It is the same as the previous one, which you can work it out. Okay. So with this, we complete this chapter. Okay. We will go ahead with the next chapter. Thank you.